In this recording, we're going to look at how to solve for the question marks on the balance sheet, income statement, and cash flow statement for July MixMax. And then we'll talk a little bit how to fill out those T accounts, but I won't go over in great depth of how to work through the T accounts because there's really not much of anything new there. I will post the solution to the T accounts in the course itself. So let's go back. How can we solve for these numbers? So I hope you've already thought through this yourself. If so, this will just be checking it for you. So if total assets are this amount, then total liabilities and stockholders' equity will also be the same dollar amount, the $152,885. So that's going to be the first thing we solve for. Now we still have two unknowns. One of those is retained earnings. One of that is the current portion of debt. So let's look at current portion of debt. If we borrowed more or if we paid it off, where would we find that? Well, if we borrowed more money or if we paid on this debt, we would see that on the cash flow statement. So let's go to our cash flow statement and we can see, yes, we actually paid $579 on a loan. So this current portion of debt, let's see, if we started with $35.63 was the beginning balance, and we can see from the cash flow statement there was a payment of $579, then the ending balance would have to be $2,984. Okay, so we know that, $2,984. So now we have just one unknown left. So we have to add up all of these. So all of these numbers plus retained earnings will give us this balance. You should solve for retained earnings to be $69,400. Okay, so we've solved for the unknowns on the balance sheet. Let's go to the income statement. Well, there are two unknowns on the income statement, so I have to be able to solve for one in a different fashion other than just looking at the income statement. Well, net income. Well, how could I solve for net income? Well, we know that retained earnings has a beginning amount, and net income causes it to go up, and dividends would cause it to go down to arrive at our ending retained earnings. Well, over on the balance sheet, we know beginning is $61,900 and ending is at $69,400. So we know this is $61,900. We know that the ending is $69,400. We don't know net income, so we're trying to solve for. If there were dividends paid, that would have been a financing activity and we would have seen it here. But there aren't any dividends. So the only thing missing then is net income. So $61,900 plus what equals $69,400. You should solve for that to be $7,500. Wrong spot there. So $7,500. Okay, and now that we know that, we have income before taxes, $12,500, net income is $7,500, so tax expense, income tax expense must be $5,000. Okay, so that finishes out the income statement. Let's move on to cash flows. We have two unknowns, and then ultimately, it looks like there should be a line there, shouldn't there? So we need these two add up to decrease in cash. Well, where else can I find decrease in cash? Well, I actually could find that over on the balance sheet area, beginning and ending, and we can see the difference. Cash went down $3,000. So let's go put our decrease over here, $3,000 decrease. So, what plus 579 equals 3,000. That should be the 2421 cash outflow. Okay, so that goes through the three. Now you're going to go over to your T accounts. Remember, you're going to solve for your, step number one, enter in the differences on your balance sheet. Step number two, you'll journalize the income statement. And step three, by default, you solve for those cash flows. When you go to record the income statement, just a reminder now, operating expenses includes both depreciation expense now. And I want to remind you that in June that changed because there's only two items. And so in June we would have seen depreciation expense to be $405. Just a reminder, Since it's been a little while since we did June, and that's because there's only 2 property, plant, and equipment. We got rid of the trucks in June, so there were only 2 left, so now the monthly depreciation is $405. Okay, and the other expense that comprises this is services. So depreciation and services. The other thing would be the income tax expense account. Recall now there are 2 related balance sheet accounts, deferred, get that to be an F, deferred tax liability. Remember that deferred tax liability exists because of depreciation. So we are using, MixMax uses an accelerated, like Maker's depreciation, where we are using straight line depreciation to arrive at this $405 on the income statement. So again, MixMax is using straight line depreciation to arrive at $405 for the income statement, and it uses an accelerated depreciation method for the tax return. So that creates this deferred tax liability account. The second related account for income tax expense, in addition to deferred tax liabilities, is the income tax payable. And you may want to go back to your June to review those particular entries. Okay, and then last, let me skip over that. Oh, there we go. Lastly is this indirect approach. Let me go back. I forgot that was going to be sideways when I started this. Let me just go over, when you do the indirect approach, there are the 6 steps. Step number 1 is that we start with net income. So we record net income. Step number 2 is that we remove anything that's non-cash on the that's in net income. So anything that doesn't take that we don't write a check for, and we know that's really this depreciation expense. So normally we are adding back depreciation expense here. Step number 3, remove anything that's not operating. So non-operating items. We don't have any this particular month, but those would be gains and losses on the sale of property, plant, and equipment, non-operating. Step number 4, do your debit credit stuff for the changes in working capital. Working capital are current assets and current liabilities that have a related revenue or expense account. Again, those are our current assets and current liabilities that are connected to a revenue or an expense account. Number 5 was the new thing. We're going to look at the changes in that deferred tax liability account. And we look at that because that is related to the income tax expense account. Even though that's a long-term, this deferred tax liability is a long-term account, even though it's a long-term account, we factor in the changes because it's directly related, as I talked about over here, to the deferred tax liability is directly related to the income tax expense account. In addition to income tax payable is related to income tax expense. And lastly, you'll arrive at cash from operations. So that's, again, the indirect approach for cash from operations. Okay, so again, just a reminder, I'm not going to go through recording how to do the T accounts, but I will post the end result with color codes to show, step number 1, the changes in the balance sheet. Step number 2, recording the income statement will have a different color. And step number 3, solving for your cash flows, will have an even different color. And one last thing I want to remind you, there's no way for the course to actually give you points as you go along completing, June MixMax, July MixMax, these T account things. However, there will be delayed gratification. We will have an exam that will just be over, will mostly be over this MixMax and the cash flow stuff. So when we get to Chapter 15, there will be an exam over Chapter 15 and MixMax. So MixMax is like a chapter that stands alone. But we will not take time to only do MixMax. So where we do, like Chapter 10 stood alone, Chapter 11, Chapter 12, 13, etc., and we took time out for each of those, I have been weaving in the MixMax because MixMax actually had related chapters to 10, 11, 12, 13, 14, etc. So we've been weaving them in and working them as we go through. You haven't actually had a standalone exam, though, over MixMax. But the point I want to make is that you will. You will have an exam over Chapter 15 and MixMax. So MixMax will be weighted heavily on that particular exam. So again, what I want to make is work the MixMax. You will best learn it by, repeatedly doing it over and over and over again. And you'll just, it's like learning to play the piano. You learn to play the piano by practicing it. You discover lots of nuances about the keyboard and the various keys, keystrokes. The same thing with accounting. You learn accounting by doing it and practicing it, and you discover all sorts of nuances by doing that. So again, you will be rewarded for MixMax. You are going to get course points, but it will be in an exam format.